So good morning, active traders, and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun, your host, coming at you live here on Saturday, December, looks like the 10th, 2022. Now remember last week, do you guys remember what my forecast was? So far it's working out perfectly. Last week, Saturday, and go back and look at the video on YouTube if you want, I said this past week would be a choppy down week. Choppy down was my forecast for this past week, and that is exactly what we got. A choppy down week. Now, one of you had remembered what I had said about what I think is going to happen next week and the week after. Who else remembers? I think it was Kent. What did I forecast was going to happen next week and the week after and the week after? Remember I said this stuff. I know how to trade. Strong selling next week and strong selling the week after. And then a Santa Claus bounce at the end of the year. That's the pattern. Choppy first week, strong down, then a little bounce at the end of the year. So anyway, let's take a look at our charts and we'll get underway here as we see which charts are most likely to work out for us and how to trade them. Obviously, now you guys should have caught the neckline short. I taught my traders how to look for this in the live room yesterday. If you're not a live room member, you should be. I called the short here at the 39.50-ish in the SPY, and it sure enough dropped there. Now, if we take a look at our daily chart, there's two things that I wanted to highlight for you. One is that we are in a directional downtrend, obviously, right? We're still in a downtrend. There's no sign of buying. Neither me nor any of the other professional Wall Street traders are going to go long this market for swing trades in regular equities until we break the downtrend over that 43.20, right? We have to get somewhere north of 4,300 to justify long swing trades. Nobody with any common sense is going to be swing trading for any length of time, at least in this current market, unless we get a break in the downtrend. We're still negatively correlated. We're still a downtrend. Now, one thing that I wanted to mention to you guys, if you look at our VIX, now what did I say would happen last week and the week before and the week before? I told you so that the VIX would bounce off the previous support level off the 1920. That's exactly what happened. And I'm profiting from it. I made a lot of money this past week trading UVXY, SQs, and SOXS, my three favorite inverses, because I knew the market was going to bounce. And my live trading room members benefited from that knowledge because I taught them exactly what to look for. It's so many winners. Anyway, remember last Saturday? This is a I told you so moment, but in a kind way, in a professional way, in an encouraging way that hopefully you can learn to trade as well as I've been doing. What doesn't count is history and the past. What does count is the right side of the chart. That's what I specialize in, is what's next. So remember last Saturday, even as this was plummeting down the last 3 Saturdays, I told you guys we're going to get a bounce right off support here. Okay. And sure enough, excuse me, this past week, that's exactly what happened. Let me throw something new at you here. How many of you have heard of MACD? I very seldom use any squiggly line indicators, but MACD does a really good job in this particular situation. What does that MACD crossover tell you here? Or let me zoom in a little bit so you can see it easier. The MACD had crossed from below and up. There was a signal line that called the market long correctly back there in October. Now, though, we saw crossover Monday, I think it was, and the MACD signal line crossing down, which tells us the stock market is in a sell mode now. That's what this MACD crossover tells you. Similarly, if we look at what I trade, which is UVXY, it had a crossover to the downside up here at the top and a bearish engulfing. And we have several technical indicators telling us that this is a long play for UVXY. One is a bullish engulfing confirming support at 7 whole number. So we have a bullish engulfment at the low. That's one signal. From a straight momentum standpoint, 4 out of the 4 out of the last 5 days were green candle days. So from just a sheer momentum price action play, that's yet another signal. And the third signal, which is new, is the MACD crossover. It came from below and crossed over. That's a long signal for this instrument. So I bought 2,500 shares of this on Friday, and I already was in 700 in my swing accounts. I'm over 3,000 shares in UVXY. Let's hope it'll work out. We'll see. Actually, we don't hope, we just plan. The price that, what's the price that proves a swing trade absolutely wrong in UVXY? Might start to scale out if it gaps down even a nickel or something on Monday and goes down another 5 cents or so. But where's the stop loss on this chart? If, like me, you bought a whole lot on Friday, as I mentioned I was doing to my live room members, where's the drop dead stop on this? All right, Damon. Yeah, nailed the reversal. Exactly right. Yeah, Kent, you're right. Yeah, Wendy. Hey, Damon. Yeah, the stop would be right under the 7. It's a 680 or 690. So somewhere right now, I wouldn't. You don't stop out at whole numbers. Neither do you buy at whole numbers. That's dumb money triggers. You use 20 cents or so as a safety buffer to potentially avoid false breakouts or false breakdowns. So 680, 690, right under the 7 is a drop dead stop loss on this. The upside, it could double, and that's what I want to do. So I'm starting off with just a few thousand shares. My goal is to be in at least 15 to 20,000 shares of UVXY by the time it gets over 10. Just so you know, I'm martingale. I'm a professional trader. I know how to do this. So, and these signals all worked out great. So does everybody see that? That's I very, very rarely use the MACD. I learned how to use it from my colleague, Peter Bain, a really smart guy for Forex at forexmentor.com. I used to work with Peter, and he's a brilliant guy, a very nice person. And he taught me the MACD signals. And so that's, and Steve Nissen, my longtime colleague of 20 years. By the way, a quick admin note, we are not doing one of these next Saturday. Instead, we're doing a World's Top Traders multi-speaker event. So we are not doing a Trading Week Ahead broadcast, boo frickin' who, on next Saturday. Instead, go to www.worldstoptraders.com and register there. There's a link kind of in the middle of the page. It should work, hopefully, for Zoom. And Steve Nissen will be the keynote speaker. We have Larry McMillan, myself, I believe Oscar Carboni, Marina, myself, and we may have one or two others. So we've got a handful of new speakers too coming up. Anyway, so we are not doing, by the way, moving forward, we're never going to be doing a trading week ahead in the last Saturday of each month. The last Saturday of each month only will be the trading, the World's Top Traders multi-speaker events, and we each speak for just 30 minutes. So let's hit the ground running and get on with it. I'm curious, a quick question. Do you guys like 30-minute presentations or hour-long presentations? For me, I'm too impatient and too tired, and I don't want to listen to anybody for an hour in a row, myself included. That's why these things are only 30 minutes. Do you guys like 30-minute format? Is that good per speaker? Wow, okay. Yes, 30, 30, 30, 30. One person, John said an hour, 30, 30, 30, 30 an hour. So we have like 2 1 hours and 15 30s. Keep it simple to the point. Okay, good. That's what I think. Abe Lincoln once said something about if you have to cut down a tree, you spend a lot of time sharpening the saw, that kind of thing. So we keep it simple and focused. Anyway, so that's a good point. Hey, Vince. So anyway, next Saturday, we're doing not one of these. So please don't email me saying, Ken, where's my link for Trading Week Ahead? We're not going to do this next Saturday. We're going to instead be doing www.worldstoptraders.com, a multi-speaker event. And it's free, so. And we'll have giveaways and all that. Okay, let's get on with it, Calhoun. Let me get rid of that MACD here. But anyway, the MACD is flashing a clear sell the stock market, buy your inverses signal right now. Okay, so if we take a look at the S&P for key support resistance levels next week, I'm using obviously 3,900 support and 4,000 resistance. So I'm using very obvious, right outside of the last 4 trading days. I'm not putting the Monday in the mix because that's too close to the high. So from a trader's perspective, a loss of right above this 3,900, that's going to be our S1 level, right on 39.20 or so. And R1, I'm going to just round it up to even 4,000. So we go long the stock market if it breaks that upper, or we short the market / go into inverses if we lose the 3,900 support, which I expect we will. Now remember, next week we've got the CPI, I believe Tuesday, and Powell speaking. I think it's 12 and 12:30 instead of the normal 2 o'clock time. Check the calendar on Wednesday. So we've got a CPI print on Tuesday morning at 8:30 Eastern, and we've got the Fed speaking Wednesday. So odds are we're going to have a very choppy day on Monday and Tuesday. It's only Wednesday after 12:30 you'll start to see directional volatility pick up. So from a trader's perspective, I still take my shots. I always do, but I'm going to trade smaller size and try and do less trading until after Wednesday's Fed meeting. And after that point, then I would expect we're probably going to see all hell break loose and a lot of selling. So my forecast is heavy selling the next 2 weeks, but not so much Monday, Tuesday, Wednesday morning. They have to wait for the Fed chief to speak. So Wednesday afternoon, Thursday, and Friday should be the start of a bloodbath, and it'll continue on into the next week. And then the Santa Claus little rally, not a big one, but a dead cat bounce at the end of the year. That's my forecast. See if I was right, like I was this whole past year, or 5 or 10 or whatever. Anyway, so here's our volatility index. The VIX sharply up off its lows starting Monday. Tuesday was the hottest day for the VIX, and we are nicely back over that 22, which is, remember last week, that was my key resistance area, was 22 in the VIX, and we climbed over that, and we were there the whole tail end of last week, Wednesday, Thursday, Friday. We poked our head over it on Wednesday, or Tuesday, and Wednesday, Thursday, Friday over the 22. I would be using, actually on this one, I'd play it tighter. I'm not going to use what's obvious. I would use 21 as support, and to give it some thought there, I would use 21 as first support, meaning if the VIX gets under 21, start going long bias in the market, and obviously the 2350 or so resistance. So I use 21 S1. The obvious support is 19. You don't want to play that with the VIX. You have to play kind of offset ahead of the crowd. So that's a good professional tip. So 21 support and the 2350 or so resistance. Now let's take a look. Let's switch channels and look at some intraday charts. My best pick in the live room yesterday was this chart, Momo. I saw it on the radar on my pre-market scan. And by the way, you should never ever spend money for specialized scans. That's a ripoff. You can see all the pre-market gappers. Just type in pre-market gappers in Google, and there's lots of websites that show the pre-market gappers. So no matter how people try and dress a pig up with some lipstick or whatnot, never ever pay for scanning. It's a bunch of hooey. It's a ripoff. All they do is derive the same information that's available for free and then gussy it up in a fancy software package, which is a ripoff and not worth it. So never pay for scanning software for daily scans unless it's specialized. The only scanning software I could recommend in good faith is my colleague Steve Nissen's candle scanner, because it's unique and has candle patterns that you don't see in every website out there, like CBS Market Watch and CNN and CNBC and whatnot. So Nissen's candle scanner is good, but the other scanning softwares out there, I wouldn't use. Anyway, here's a pick that I gave my members yesterday before the opening bell. I said we should go long Momo if Momo got over the 730, and boom, that's a win. Now let me show you something really important here. Unlike any other live room in the world, I give specific, for paper trading use only, not a trading recommendation, I give specific alerts ahead of time. So when the market's before the opening bell, I'm providing my traders specific triggers to use so that they can put in buy stop orders in their demo account to learn from before the opening bell. And that's a huge impact. That's something that so many traders and so many new members as well this past couple of years, a lot of new folks on board. So for example, with this chart right here, the Momo chart, this one's really good. We take a look at it. Momo, I said to go long if it got over 730. Now I said to sell right under 8, okay? And then I said get back in at the 820, I think it was. So I had two different long alerts, and we played within the whole number. Each one, we You buy right above a whole number, in this case 730. We sell at say 790 or tighten the trailing stop, and that takes out, banks the profit. Then you get in again above the next whole number. In this case, 830 I think was a long trigger, and then I had him sell at 880 for a second win in a row. So we had two, not one, but two winners in a row, a second chance winner that also worked out above the 8 whole number. So that's an example of the type of charts and the type of alerts that I provide my members. And I give, we have lots of charts. That was a good bounce. Docu was a good open range breakout. Now Boyle was pretty strong too, right? Natural gas ETF, etc. So anyway, I give my members these kind of charts, and they look over my shoulder virtually through the Zoom platform. You can see just what you guys are seeing, right? And we go through this chart, and we have time and sales, and we take a look at the patterns. Okay, now let's switch gears and get over to our swing trading charts. But first, I did want to mention, now I've not put together a video for this yet. I've been swamped with work and a lot of new customers, but you don't really need the video. I'm telling you about it right here. My coaching program starts in 1st of January, and so you can put in your application. We have a lot of new members, so for those of you who have joined already, thanks. We still have some seats left. I appreciate that. I'm capping the enrollment. I got lots of applications sent in. So everybody who sent in an application has been sent either a yes or a no response. I think we're running about 87% of the people applying. And dozens of people apply. Almost 90% I've approved. The other 10% I said no because either they're too new or they're options only traders or Forex traders or whatnot. That's not what this is for. This is for stock and ETF day and swing traders. And you get lots of trade reviews. I go over your personal trades. We have lots of courses, meetings throughout the entire year next year, plus lots of other bonuses. So take a look at it at trademastery.com/action. And if you have not yet got your application in, I urge you to do so. And for those of you who've been approved, some of you still have not registered or enrolled yet. Quite a few have, but for those of you who have not yet registered, I would hurry up and do so. At your earliest convenience, sometime this weekend, or say by middle of next week at the latest. So if you have an approved application, I do require that you go ahead and register. I'll give you a week until this time next week. And if you haven't registered by then I'll move, then I'll decline and I'll let someone else who's in line to apply get their spot. So I will give you fair warning, and you do have an opportunity. So those of you who've gotten your applications in and I've approved them, and you've not yet paid for your membership, please do so this upcoming week. Okay, thanks. That's it for the sales pitch. Now let's get back to our charts. Do you guys have any tickers for me? Remember, I don't think it's going to be a smart time to trade this market for swing trades unless the market breaks that previous resistance. Now, the wild card in the deck is going to be the CPI print on Tuesday morning at 8:30 Eastern, and Fed Chief Powell speaking around the middle of the day on Wednesday. Those will be the market moving events, and after those two have cleared, then we can start making decisions. All right, let's turn. Here, when the pricing's on the website, in the FAQ section, let's see, TME, TAL, VXX isn't trading. AM, AXSM. That's a great chart. Yeah, congratulations. TME, it's a brilliant chart. I love that chart. I don't know what company that is. I'm not familiar with TME, but that's a beautiful chart. That's a A+ Rockstar 10 chart. It's got range. It's got 45-degree tight breakout. That's a brilliant chart. Tal's okay, yeah. Tal will play. I think it's Talbot and Energy oil play, right? That's good. It's not great, but it's good. Hey, man, that'd be okay for intraday trading, not for swing trades. And AXSM, let's take a look. I wouldn't trade it because it's already pretty expensive up here at $80 a share, but it's a good chart if it does clear new highs over the 82, 84 range. Oh, wow, a lot of charts. Let's see. Give me your best charts, guys. And we'll take a few minutes here and go through them. And I'll tell you my honest thought as to whether or not I would trade it, if I like it or not. So far, the TME chart's brilliant. So whoever TME is good. ACAM Ford. If it ever gets over 15, gaming with win. Okay, let's take a look. So the first thing we have to decide is it worth trading, yes or no? And if you have any questions, type them in the chat box. I see a few of you are, a lot of big turnout today. Well, thanks to all of you for being here. I appreciate it. I didn't know if I'd get a big turnout on the holiday. Remember, next Saturday, we're not doing one of these. Boo-hoo, because I'm doing the trading, the world's top traders, the trading summit with multiple speakers like Steve Nissen and Larry McMillan and myself and others speaking this upcoming Saturday in lieu of or instead of this time frame. So we're not going to do this next week. And so sign up for those over at worldstoptraders.com. Let me see. That's it. Let's see. This chart is brilliant. I like this one a lot. It's good. It's got the range from 5 to 8. That's plenty of range, plenty of juice. Lots of green candles. It's in a good uptrend. That's a great chart. Thanks. I'll hit that one after Wednesday if it's still going up. So IMMR looks brilliant. Let's see. I like the fact that it gapped up, but it's too early to tell whether or not it'd be a good trade. I'd have to see a few more days worth of trading data to see what the traders do with it up there. Because often you get a mean reversion pullback or gap and crap. So if it gets new highs, maybe. Ford's still in a pullback, so no. When it's in an uptrend, it's good. Good, strong chart. I would still play with this over 92. It's not great, but it's good. So far, the two best charts I would trade. Again, not trading recommendation. Would be this IMMR and TME. Those are both brilliant charts. And those are the kind of charts that I like to help traders look for with the help of my members in the live room. We cover both day and swing trading charts. I often put on live swing trades daily at the end of the day. So right before the close or right after the close, I'll stick around, maybe 10 minutes or so after 4 and put on some swing trades if any look good out there. In addition to what I've done in session. Hey, Josh, let's see. Isn't the candle a negative? Oh, I don't know which chart. Thanks about the volume, IMMR, let's see. Well, you never buy it till it gets above the high. Yeah, good spot. Yeah, that's a bearish shooting star up there. So again, it's still a good chart, but we don't buy it unless the price action breaks above the high, above the shooting star. So it'd be fine up over, say, 8.6, which that's not a recommendation, but that's the earliest I would buy it. But yeah, that's a good spot though. Yeah, with a shooting star up at the top, so that is a negative, but it wouldn't put a kibosh on the whole idea of trading it. It's just negative for now. So what it would do is tell me if I were long here, I would tighten up my trailing stop to just under the shooting star low at 8. That's what that candle would tell me is if I'm already in, tighten up to scooch up the trailing stop to 8, so it's just under that shooting star low. And again, for more on candles, learn from Steve Nissen, only Steve Nissen at candlecharts.com. He's brilliant. What he teaches is very effective, trusted by the World Bank and all these, everyone, myself included. Anyway, if it gets over 8.4, we're good to go. But right now, yeah, you're right. We stay clear because the shooting star. When you wish upon a shooting star, let's see, AutoZone, beep beep. I missed my 300ZX. Wow, that's a great chart. A+ chart. Looks beautiful. Nothing wrong with that chart. AutoZone looks perfect over the 70. Great chart. You don't have to overthink it, right? I mean, you should be able to instantly eyeball a chart and see whether or not it's worth trading. This one, it's okay. The range is sketchy. That one, it's okay. But that one's a 10. It's kind of like looking at supermodels and who's a 10, who's a 9, who's an 8. So actually, I'm going to put that here. Put that down there so we can remember these for next week. Now let's take a look at the last week charts. You guys have picked. No, I'd say keep an eye on Biddy. It's not gone up yet, but it's how to short Bitcoin. So if it gets over 41, BITI, EXTR, pull back, but still good if it takes out highs over the 21. Ditto with Gap stores. Wait for it to get over the 15.5. DHT sold off too far. Flex is okay, still good over the new high. I like Facebook, but it's not great. Peloton, not too choppy. Roku, not too choppy. Bed Bath & Beyond, I think not. AMC, just say no. Joey did do a spike, but then it dropped. US Steel had a couple of up days lately, but it's pulled back, so no right now. And VIPS, that's great. VIPS is good. Okay, so that's our list with a special nod to TME and AZN. Now, I prefer charts under $20, $30 a share because I like to trade a lot of different things. I don't want to stretch my capital and be trading, $100 stocks when I can trade $10 stocks just as good or if not better. So I like stuff like this. I don't like the penny stocks, and I generally don't like, pop and drop momentum day trade stocks under $10 because those are very sketchy and get halted all the time. But for swing trades, consistent charts like this make perfect sense. So, oh, thanks. Okay, Steve told me VIPs, TME, and TAL are all Chinese. Okay, I did not know that. Chinese internet stock yen is up a bit. Yeah, Alibaba's good. So China's up, okay. I used to date a Miss Chinatown at UCLA. Her name was Cheryl, and she showed me how to make egg drop soup. It was amazing how simple it is. But breathtakingly, anyway, I digress. I'm sorry. I like Asia culture. Let's see, what's the website for the world? It's worldstoptraders.com. Let's see, Johnson, when does the Santa Claus rally usually start in the past? It varies, but it could be 1 or 2 days either side of Christmas. I think the COVID rally, if I remember, it was the day right after Christmas. So the last week in December may be a dead cat bounce. I wouldn't expect a huge bounce. I still expect massive selling in the stock market. Massive selling in the stock market. This market is not going to bounce for any length of time. It hasn't all year, and it's due for an even bigger decline. In fact, I'm surprised it hasn't dropped further already. The market is a beginning, it's a baby bear market. It's going to become a full-on tremendous bear market. Ignore the talking heads who say, booyah, buy quality oversold things that are returning value to shareholders and are actually making real products with real profits. I mean, if you're a 20-year long-term investor, I guess I can see that makes sense. But anybody recommending buying stocks right now is doing a grave disservice to their viewers and their listeners. I'm talking to you. I won't mention his name, but anyway, you don't want to get mad at the stock market and have mad stock plays that blow up in your face like so many do from the talking heads. Instead, you want to listen to the technicals and the chart patterns. What are the charts telling us? I like Carter Worth, the chart master. He's probably the only person. He and this other Marion, I don't know if I'm pronouncing his name, EL-MEH something. He's a smart guy. And Warren Buffett is smart. This is a really short list of people I pay attention to on TV because most of them are idiots. Like, I won't mention the Perma Bull's name, but he's been calling the market wrong and long all year. I've been calling it short and correct all year. What I want you to do is give some thought. We're going to wrap up here, folks. I want you to give some careful thought to how to play the end of the year. Do be sure to join my coaching program if you want in-depth study with me. At a minimum, you should be a live room member. At an absolute bare minimum, you need to be part of my live room. Hopefully, I'm very intelligent, very correct in my calls most of the time. We have lots of winners every single day. We have at least 5 or 6 wins a day minimum. And, it's a good team environment where we're supportive of each other. So hope that you guys do well in your trades. Let's hit it out of the park. Some notes on UVXY. What's the one thing that's missing from this technical picture that would make me feel even more warm and fuzzy about buying some volatility down here, buying some UVXY? What's the one thing that's missing? And it's actually moderately important. It's not a must-have, but it's important. It's in the top list of stuff we'd want to see that I don't see yet. I'm going to keep a careful eye on this, and that'll help gauge, hint, how many shares I purchase. Right, earning, right, Wendy, right, Heidi. Let's see, Shalish. Damon got it. Volume, yeah. John got it. Philip, DS, Warren. Yeah, you guys got it. Yeah, right. Absence of high volume. What I'd want to see, what would make me feel comfortable or more comfortable about, I'm still comfortable about buying this here. I think I nailed the bottom, but it could go down to 3, right? We don't know. This came down from 24 down to 7, but what it's missing is volume. So I'd want to see volume profile like scooch over there during the first big leg up earlier, a few months back. Volume up near the 100,000, 80 to 100, or I'm sorry, 80 to 100 million volume bars. I'm not seeing an accompanying increase in volume. So they're not buying convincingly yet. It's a speculator's entry that I did on Friday. And if I can show you here, I mean, I'm always happy to show proof. How many of you, show of hands, think it's important that anybody you learn how to trade from has some track record of success, they've had profitable years, and they have tax return proof that they actually really trade? I do, but I'm only one of a very few. I would think that if you're going to learn something from somebody, they kind of should prove that they actually do what they say they're going to do. At a minimum, show tax return proof that they are actually even a trader, which the majority of educators are not. At most, they do a little sim trading dabbling. I've talked with a lot of educators, and unfortunately, most of them are bullshit, and you'll just lose your money following what they say because they don't know, because they don't really trade. You have to learn from guys like me who actually know how to trade, are real traders, right? Anyway, just saying. So I'm always eager to show, like almost daily, I show pictures of my Fidelity account. And if anybody wants to see it, I'm on demand. I'm happy to show what I'm doing. We're going to wrap up here. I'm logging into my Fidelity account so you can see and see activity and orders. Trying to log in over there. Come on. Okay, well, maybe it's hard to see here. Delete my account number from the browser window there. Okay, but anyway, there are some examples of buying a lot of inverses into the week, and you can see I bought quite a bit there, 20,000, 18,000, 13,000 worth. But that was from yesterday, right? So I'm in, let's see, double check my position sizes here. Yeah, I'm in 2,500 of this, and just small nibbles in SOXS, SQs, and KOLD. It's much smaller positions, but I'm in those two. The main position is $19,575 worth of UVXY. So betting against Wall Street, as I often do. Well, thanks, Ken. Good to know. Thanks to the list. I recognize one. In your opinion, other than you, who do I consider real traders and not newsletter sellers? Well, it's not that everybody's bad and evil, but incompetent is the main thing, and waste of time and money is the other thing. So you want to learn from people who actually really trade, can demonstrate that they really trade, are very open, very honest, very candid, and don't make promises. Like anybody that promises you too can make consistent profits is full of shit. Anytime you see the phrase consistent profits, run away. Send them to the FTC. But you want people that are honest, they're hardworking, and the real thing, right? So it helps. Oh, thanks. I appreciate it. Hey, thanks, Kim. So let's see what else. Well, there's so many comments. I'm sorry, I have to scroll up here. Hundreds of people. I'm trying to. Let's see. I think that's it. We'll miss the jazz. Okay. Yeah, well, I will be doing these still the first 3 Saturdays of each month, but the last Saturday of each month we'll be doing a multi-speaker event. So it's good to have a break for me alone anyway, right? You'll have, it's not using this link that you got in, it's a separate link for World's Top Traders, and there'll be different links each month. So you have to remember to re-register each time because we have different speakers. And so anyway, looking forward to working with you folks, and do good out there. Be a passionate fan of testing and experimentation. Don't take anything at face value. Test, or like Reagan said, trust but verify. I don't even trust. I just test everything and see what works and what doesn't. And what works, at least to the best of my ability to teach it, is what I share with you in the live room. So anyway, you guys have a great holiday weekend. I'm going to try and relax here with the family, and wanted to wish you all the very best for a fine week ahead. This December promises to be very volatile. Who can tell me why I'm forecasting a lot of selling the next 2 weeks? Wrap it up with a quick common sense. You know, I'm a UCLA graduate. I've got dual degrees. I used to be a statistician for Ford, and I've got a lot of Fortune 500 background experience with both blue and white collar. Anyway, the point is, what's one of the things that has face validity that may well cause a lot of selling this December, more so than we've seen before? Who can tell me? Oh, wow. I got to scroll down now. Yeah, Phil saying poor leaders. Yeah, they'll do it. Retail sales. Kent has it. Kent has it right. Stephen has it right. Sharon has it right. Mark has it right. John's right. Efshin's right. Michelle's right. Neville's right. Yeah, you guys are all right. Tax loss selling. So smart. You guys are smart. Thanks. I like doing these webinars because so many of you are intelligent, which is candidly a very big relief and fun. It's tedious to deal with adults that are like children. It's a pleasure and an honor to work with so many of you folks who are really smart. We can keep each other on our toes and help motivate each other and be intelligent. So yeah, so many of you said tax loss selling, and that's exactly right. With a lot of the, especially large cap tech getting crushed, a lot of not just retail home traders, but the retail firms that control a lot of Wall Street's capital allocation are forced to dump their shares, and then they'll buy back, early February after they run up a bit, but they'll still get a piece of action if the market recovers. But the point is, in the wash sale, they can't trade it in January if they trade in December. But the point is, you're going to see a lot of tax loss selling between now and December 31st. It's going to shock anyone who doesn't know what to look for. What is going to disappoint me deeply is my own failure to trade heavy size as I should. I mean, like really heavy size, like $300,000 or $400,000, some serious size on the inverses as they skyrocket up. I'll likely be doing 50, 80,000 bucks worth, but dibble dabble. I think we have a rare opportunity, and I'm an expert in trading these things. I did over $10.1 million worth of trade order flow in UVXY last year alone. I'm a total expert in that instrument. I can't make any promises. You can't do that by law, but I am extremely experienced in trading inverse instruments. And you have my word. I'll give you my very best. I'll tell you what I'm trading, and I'm not always right, but I'm right often enough to make so many new folks stay with me for a long time in the live room. So anyway, tax loss selling may well accelerate. I expect it will, especially by that third week in December. You're going to see the market really drop. Now, let me go out on a limb here. I'm very happy to do so. Again, I used to be a statistician. I'm an expert at data analysis. Is what I did, and as a trader, it's what I do daily. So in that 1 year, let's take a look. I'm going to wrap up here. We're almost done. COVID lows there. We're going to easily take out the 3,400. I would expect by early to mid-January we'll be here, and we'll see a heavy start on it. I don't think we'll take out the COVID lows till February, March maybe, but I'm sure we'll get under that 2,100. This market is really going to sell off quite a bit. This whole past year has been a study in selling, right? Everybody who is buying stocks in January is a moron. I would say is a moron. I shouldn't say, because maybe you guys are buying. I mean, I was too, but for short-term swings. Any investor who bought the market after January lost quite a bit of money. The market's gone down sharply since January. The market stopped going up back in January. If you didn't get the notice, hint, the stock market stopped going up in January. It's still going down. It's not going to bounce anytime soon. In fact, it's going to do an epic sell-off. We'll have these bear market rallies now and then just to fake out the dumbasses. But those of us who are professionals bank our money shorting this market. One thing that I choose not to make the time to do, but I should, is learn how to trade options for buying puts, right? Not even zero DTEs, but even weekly options. That might be something I do figure out for myself. I know a lot of the world's top options guys, like Sosnov and McMillan and Price and all that. But the point is, a weekly buying puts on the index, on the spiders, for example, the NASDAQ index puts may be a very viable strategy moving forward, as is buying the inverse ETFs that go up when the market goes down. So what does this tell you? Is this a good place to buy the stock market? No, only moron would buy the stock market here. Let me clear those lines off. Moved up and pulled back. Still in a downtrend. And just a last look here. Really long-term chart. Do you really have any business buying this chart pattern? Is this a smart place to buy? No, this is a smart time to get out if you're in for any long-term, especially if we get under, say, the 3,400 or whatnot. But the market ran up nicely for a long time. It was fun while it lasted. I expect massive selling coming up this next quarter, especially, and it would not surprise me at all to see us lose the 2,200 by summer. So you want to prepare for that, and you want to have an intelligent game plan. So many people that don't have experience, like those of us who've been trading 20, 30 years, you've seen bear markets. We've all seen them. Like the dot-com bubble crash back in the day was a lot of fun. But this is not a market to be fooling around with or trading the wrong way. You want to trade it intelligently. So, okay, I'm going to wrap. Enough soapbox. You guys take care. You've been great. I appreciate all you for sticking around. A big turnout. Wanted to wish you the very best for next week and the balance of the year. Do be sure to join my live room at a minimum, and also give some thought to the coaching program and get your application in this week. My deadline is, I think, the 13th, so I'll probably extend that because that's only Wednesday. I'll probably extend the deadline on the applications till end of the month. But if you want to join the coaching program, do get your registration, your payment in sometime this week to guarantee you got a spot. There's still seats left, but it's starting to fill up. So good time if you're interested in getting my honest take on trade and going over dozens of your trades for trade reviews, personal one-on-one phone calls with me, Zoom calls, and courses and the rest of it. So that's my coaching program. And if you don't join the coaching, at least join the live room, at least for the next year or so. So take care, and I'll see you guys next time. Thank you so much for being here. Trade smart. And again, the coaching site is trademastery.com/action. And I hope you take action for your sake. So take care. Bye.